Welcome, everyone. For those who have not yet had the chance to meet, my name is Francis, and I'm part of the investment team here at Madica. In today's session, we're hoping to go over a couple of key aspects of the Madica program. We'll start by walking through our mission statement, why we exist, and why we're doing what we're doing in the continent. We'll spend a bit more time deep diving into the unique aspects of our program and the different perks that founders can benefit from being a part of the Madica program. Because like Shamsa had alluded to earlier, we're not just offering funding, but we're also providing hands-on support, mentorship, and a community to help founders navigate their journey in building, truly global companies from the African continent. I think it's very important before I get in, just to notify everyone, the session is being recorded, and we'll be happy to share, the recordings right after. We'll also have them up on YouTube, and you can always, go back to watch if you've missed anything. I'll just quickly share my screen. I have a very short presentation to walk us through, and then we can open up for questions right after. The presentation will take about 10 minutes, but also very keen on managing time, so we'll just get started. I think, high-level context for those of us who are already familiar with Madica, we're Africa-focused pre-seed investment program. So I think one very interesting way we like to, describe Madica is almost like an intersection between a VC fund and an accelerator program. We'll spend more time talking about the similarities, but also the differences in terms of how we're positioned to offer value across both levels. But for us, what is really important is that we are really exploring local talents and leveraging a lot of the experiences and networks that we have, given our close affiliations with Flourish, which is the global VC fund, to build global startups. So we're going from local and then expanding into global reach. Now, why do we exist as Madica? I think for everyone who is on the call, if whether you're a founder or you work within a startup ecosystem, you're familiar with the general problem that most African companies face, right? In terms of accessing funding and strategic support to scale their business. There's also some level of scarcity of investors, some level of scarcity of mentorship, right, that is required to grow compared to global markets where it's a bit more matured. There's cash, liquidity from an investment standpoint, but there's also sufficient mentorship and training support available for early stage founders to be able to grow. I mean, this is also outside structural gaps in the ecosystems that hinder innovation and entrepreneurship within this ecosystem. On the one hand, while we believe that that problem still exists in Africa, the flip side of that is we've also been seeing a lot of growth in the African ecosystem from a funding standpoint, right? With the exception of 2023, we had seen what we describe as a hockey stick growth in terms of funding that has been coming into the African ecosystem, which is generally positive, and everyone is optimistic about the future. However, underlying that trend, you would also notice that while we have seen increased funding coming into the African ecosystem, there's also some level of disparity in where the fundings are really going. An example of that is from a geography standpoint, most of this funding you would find are concentrated in what I would describe as tier one markets, 4 of them. So it's typically Nigeria, Kenya, South Africa, and Egypt that will typically get the lion's share of funding. And then other ecosystems or other geography are really struggling to access, what the remaining portion of balance is. Another category of what I would say is disparity in funding allocation in the ecosystem is in terms of demography, right? So we found that, male founders, for instance, are able to raise or find it easier to raise more funding. Founders with certain kinds of educational backgrounds or certain ties with Silicon Valley or international investment communities also find it a lot easier to raise funding. From a sector standpoint, we see that fintech, right, in the African continent has by far been attracting the most funding. Now, what does that tell us about the African ecosystem, right? There's an underlying, what I would describe as bias in terms of how funding is being allocated disproportionately. What that also means is for founders who are not in what you describe as your tier one markets, or founders who are not building fintech solutions, or founders who are, raised and educated locally with very minimal ties to foreign investors, these founders struggle to actually, access financing, and in most times also access structural support in terms of mentorship training to be able to, build truly successful businesses. And for us, that's the gap that exists, right? Not a lot of, investors are paying attention to that gap. But for Madica, that is really the why and what's driving us. We want to be able to democratize access and help support these underfunded sectors, these underfunded, geographies, these underfunded, founders, whether it's from a demographic standpoint. And so that sort of encapsulates the why we exist. So our mission statement in that sense is really, supporting and identifying African founders who are building, incredible solutions, innovative solutions, scalable solutions, but are operating in these underrepresented or underfunded categories and are finding it difficult to, access the required funding and support that they need. Now, all of that is really encapsulated in 3 pillars in how we sort of provide this value to founders. On the one hand is the capital aspect. Now, going back to what I said in terms of, us being structured almost like in this intersection between a VC and a sector program. From a VC standpoint, we do write checks. We support founders with up to 200K in investment funds, and we also support them to unlock further investments, leveraging our network, but also the global network of Flourish Ventures. So that's a key pillar of the value support that we bring to the ecosystem in working with founders. We're also very big on building a very thriving and valuable community for these founders, right? So founders who are, in ecosystems that are less mature, tier one markets, being founders within the markets that you operate in, but community of, founders and investors in adjacent markets, in tier one markets, even global, community, right? Where you can get valuable, insights, ways to explore, synergies, scaling your business into new markets. We also provide, expert coaching, mentorship, right? And so it's really about building that thriving community that is now beneficial to founders in what we describe as emerging sectors or emerging geography. And then the last bit is the curriculum. And this really speaks to our structured, investment program that we have. Now, going back holistically, how we think about serving the African markets, particularly the underrepresented or underfunded sectors. We have the capital allocation to support you, particularly in the early stage. But then we now have an 18 months, structured program, which we think is very, very critical to your growth and scale. And so in that regard, the 18 months program is designed really and is very personalized to the needs of the startups, regardless of what stage or what sector you are operating in. And that 18-month program really is about, giving you mentorship, exposing you to new ecosystems, expert coaching, and everything you need from a tool standpoint to be able to scale, your solution outside of the markets that you currently operate in. For us, I think it's very, very important that, with the combination of these 3 pillars, in a sense, are able to de-risk, these investments, not just for founders, but also for global capital, allocators or investors who may be looking at these sectors or looking at these ecosystems, but for some reason or the other, find it highly risky. Madica's mission is really to be able to go into those ecosystems, invest in certain founders or in certain sectors, provide the necessary support early stage that makes that entire, ecosystem or that sector less risky for capital allocators. And over time, we start to see a bit more investment flows into those sectors. So holistically, that's sort of our why and what we're trying to do and what we're trying to achieve. From a team standpoint, we run a very lean team. So we're a startup ourselves in that regard. We're being led by Emmanuel Adegboye, who is the head of Madica, has done extensive work from, bringing together, startup founders, bringing together investors, building ecosystems in multiple regions. I myself, I sort of like lead the investment team from a deal sourcing, deal evaluation standpoint. I do have a lot of experience in the VC ecosystem. I've been a one-time co-founder myself, so I can relate with some of the challenges that startup founders like yourself face in growing and building and scaling startup. Shamsa, who you heard from earlier on, also brings a lot of expertise from a communications and community standpoint. Like I said, we are part of the larger Flourish team. And Flourish, for those of us who may not be familiar with Flourish, they're a global VC fund. They are very, very focused on supporting, founders in more of the fintech and financial services sector. They typically invest in growth stage companies, more Series A. However, they are also very, very, conversant with the challenges that has been faced by African founders who are building other sectors. And it is out of that need that, Madica was formed, and they've been very, very, helpful and instrumental with us working to actualize our dream on continents. One other thing that I think is worth noting is, apart from the core team, and I won't spend much time on the team side, but I think it's very valuable insights, is we don't work alone in delivering this program to startup founders. We're also leveraging our expert network and have a mentor network that we're continually refining and scaling. But right now we also have 3 mentors who would be working hand in hand with portfolio companies to help them scale. They come to the team with varied experiences in multiple sectors. They've built and scaled solutions, or they work within organizations, streamline operations, and ultimately scale. So these are some of the sort of mentors that we have today. This list is a growing list, but we also find that the contributions that they bring to the team is also valuable in terms of how we think about partnering with founders within the African ecosystem to scale. Before going into more in depth about the program, just wanted to highlight some of the founders we have supported so far. It's a growing list. These are companies or startups that we have officially closed investment in since we started. There are a few other investments in the pipelines that are going through sort of like legal would close. And so hopefully in the next few months or next quarter, there'll be a few more announcements, and this list will continue to grow. But so far, we've done investments across multiple regions. We have investments in Tunisia that have been approved. We have in Morocco, we have in Nigeria, we have Ghana, Kenya, and South Africa. A few of those, like I said, going through legal, but for the ones that have closed, we have New Farm Foods, who is a biotech company very based in South Africa. We have GoBeba, based in Kenya. We have Collar Market, based in Ghana, and we have Earthbound in Nigeria. So I guess we can spend the next few minutes, and I'm very mindful of time because we want to leave enough time for questions and answers. But maybe the next 5 minutes just really spent talking through the investment program itself and giving you as much information as you need. Hopefully some of the questions you already have would be answered as we talk through this. Now, flipping to the investment program, so it's an 18-month program, very, very tailored, like I said, to the needs of each individual startup, regardless of what sector you're building in, what geography you're building in. And beyond the investment of 200K, what other perks that you get access to include one-on-one mentorship, right? You get expert coaching, you get access to a larger community size, and the next few slides will sort of help us emphasize some of these points from a curriculum standpoint. And I guess maybe just to spend some time explaining how this could be differentiated from other accelerator programs. While it's an 18-month structured program, we are less, I would just say, class-based learning, right? For us, what is very important is that we're really focused on what it is that the business needs to do, or what it is that the startup needs to achieve from a scale and milestone standpoint. to make them attractive for follow-on funding. And so our curriculum really is 18 months of bespoke support, refining your vision, refining your milestones, in scheduled sessions. In terms of the sessions, we have about bi-weekly sessions, right? Giving room for founders to actually work on building their businesses, but we also understand the need for peer mentorship and some level of expert support. So we do schedule some of these sessions across the 18 months. Mentorship, which is also a very big part of the value proposition here. Like I said, each startup founder will be paired with a lead mentor. That lead mentor is basically your champion within the Madica team. They'll be responsible for, your growth, addressing challenges. If you need, help or assistance with, scaling into new markets, they'll be your go-to person, your go-to contact. And so that is one of the value. And these mentors typically will be assigned to you based on the industry or areas where you need expert advice. And so there's a level of matching that is being done to assign you to the right mentor who will provide the right value for your business or for your startup. For us as the Madica team, we do like to hear more about the progress that you're making throughout the program. So there is a monthly check-in, that we do and organize, just really to hear more about how we can further structure the program to provide you a bit more value, and follow up on certain conversations that have been had over time. We also provide executive coaching. You have access to up to 10 hours, and this is really with global experts, like we had mentioned. From a reporting standpoint, we really just expect monthly and quarterly reporting. I think one other thing I would like to really highlight in terms of where we think founders also find very valuable is our immersion trips. And founders in the program over that 18 months period would typically have access to up to 3 of these immersion trips. And in very, simple way of describing it is, while we believe that founders, benefit from the one-on-one support that Madica provides throughout the program, we also believe that there is some benefit in providing additional exposure to new ecosystems, right, from a scaling standpoint to founders. And so for us, the immersion trip is one way of doing that. So it's a fully funded trip by Madica. And this is really outside of the investments that we make at no cost to founders. But the objective really is to be able to have all portfolio, founders explore new ecosystems, whether it's from a access to global investor standpoint, whether it's from a access to global expert standpoint. And each of these immersion trips would be in, very new ecosystems. Usually in the past, we've tried to align them with global conferences that brings a lot of these stakeholders in one place. And then, we visit. I guess as an example, the last ecosystem immersion trip we have done was in London, and we aligned that with some of the ATS conference, which was very valuable to our startup founders. And a few of these immersion trips will be planned, as well going forward. So that's very, very important and very key, and just worth highlighting. And I guess not to overflow these points, but we're also big on providing access to a community, right? Beyond just the Madica team and your mentors, but also building a thriving community outside ecosystems with other mentors, other experts, other investors that would be valuable for growth of each portfolio company. I think outside of the program, one other thing that I think is worth spending a few more minutes really emphasizing is what that journey looks like for our founders. Now, holistically, it could be broken down into 5 steps, right? Each of these steps would have different timelines, but I am assuming that for most of the people on the call, you are either, at the initial application stage, thinking about applying, or we have had 1 or 2 conversations, since your application. So technically, you'll still be categorized, as the first stage. And maybe just spend a few more minutes really talking through that for those of us on the call who haven't applied yet or are still thinking about applying. So our application process is typically 2 stages. The first stage application really is just to get high-level information about the business you're building, where you're building it, what is the solution, who are your team members. Based on that information, we shortlist and invite you to apply for a second stage. Those that are successful and apply, at the second stage, there's also a second application screening and shortlisting. And for those that are successful, we get a chance to speak one-on-one on the screening call. So these are 45 minutes, pre-scheduled calls where we really just spend time, trying to understand a bit better what you're building. Typically, if you get to the screening call, it's an indication that we do think there's something there, but we want to really understand from your perspective what it is you're building and how valuable it is to the ecosystem at large. For companies that we have sufficient conviction on after that screening call, we invite them for due diligence. Now, our due diligence stage is really between 4 to 6 weeks. We want to spend as much time really understanding the business. Typically, we'll ask to see your data room, really understand your team structure, your corporate governance, but also from a commercial standpoint, how you think about scale. We'll typically also speak with a lot of references, right? Whether it's your team, whether it's experts within the ecosystem, whether it's previous investors. All of this really is to build our conviction that this is, a Madica fit company. And we'll also spend a bit more time at the end of the presentation, really just going over what is a Madica company and what is it we're looking for. But from a due diligence standpoint, we spend, as much time really understanding that we're quite thorough in that regard. After that process, usually, if we have sufficient conviction, we go to IC and ask for an approval. I see someone's hands is raised. Husaya, if you don't mind, maybe keeping your question to after the presentation, I'll be more than happy to take as many questions as possible. I think we just have a few more minutes, so I'll rush through it. After the investment decision has been made, the next stage is really, legal due diligence and, having funds wired. Legal due diligence really is just to confirm that from a corporate governance standpoint, you guys are structured properly, you're registered in the right domicile. And I guess maybe that's also an important point to highlight that we do have a preference in Madica for domiciliation outside of your operational market. So if you're a Nigerian company, we do have a preference for having top co domiciled in either Delaware or any other OECD compliant jurisdictions. I know it might be different with different funds, but something to keep in mind as you think about either applying or if you've applied, what sort of changes may happen if you do get through our investment decision process. Now, after legal due diligence has been confirmed and funds have been wired, you are officially part of our portfolio, and then the 18 months program officially starts. That comes with all of the support that we have mentioned in the previous slides. And then obviously after the 18 months program, it's not just done and dusted. We still think you're part of our family. There's still a lot of support that we believe we can continue to provide for founders post-investment, but also just thinking about how valuable that community would be with alumni from the Madica program, also helping new startups within the portfolio think about scale, right? It's also very valuable. So it's a lifelong partnership or lifelong relationship that we try to foster within Madica, and it doesn't end when the program ends. Now, maybe just taking a step back while we finalize the slides to really talk about who is the Madica Fit company. Going back to the why we invest and really thinking about the problems that we're trying to solve from a funding standpoint in Africa, right? The disparity in which certain kinds of founders are able to access funding relative to others. Our strategic sort of thesis around who is a Madica company would typically cut across, those categories. So from a, I guess, geography standpoint, while we have the flexibility to invest across all regions in Africa, we do have a keen eye for investments that are typically outside of tier one markets. But that's on the one hand. This doesn't mean we wouldn't do investments in tier one markets, but from a strategic standpoint, we do have some sort of preference for startups that are outside these tier one markets. Sector as well. Fintech, like I said, is one big sector that also has been attracting a lot of funding, but also realize that there are very high quality startups outside of fintech that are worth backing and worth betting on. So from a sector standpoint as well, while we could do fintech in certain regions, we have a preference for sectors that would typically be outside of fintech. Beyond that, I think from a demographic standpoint, again, this doesn't limit us, but in terms of preference, a level of diversity on founding team, I think is very valuable to us, right? So this would typically be reflected by either having a female co-founder or having a team member who is a C-level, exec that has up to 10% or more within this company. I think it's very, very interesting for us. And so some of those strategic fits, I think it's worth keeping in mind as we think about who is a Madica company and what kind of companies we're looking for from a strategic standpoint. Now, outside of strategic fit, obviously there's commercial fits, and a few things that are worth considering is our focus is really pre-seed early stage companies. Just confirming that everyone can still hear me.
Yes, we can, Francis.
Okay, great. Yeah, so from a, sorry about that. From a commercial fit standpoint, obviously we're very focused on pre-seed, companies. These are very early stage companies. I think some metrics that are worth keeping in mind is we want or would prefer companies that have some level of traction, whether it's from an MVP stage or some level of validation in terms of paying customers. It's really, really key for us. And the second bit about that is from a funding standpoint, we do have a preference for startups that have not previously raised significant institutional funding, right? Really just reflecting, on the challenges that we have spoken about in terms of accessing funds. Typically for startups that are able to access, significant institutional funding, may not necessarily, fit into the kinds of startups that we want to support because, they don't face the same challenges in accessing those kinds of support from an investment standpoint. So just a few things to keep in mind. We do think about it strategically from a, what market you're operating in, what sector, what is the diversity on the team. But I also want to be clear that that is not limiting, but, it does influence how we think about who to prioritize in that sense. Then from a strategic commercial standpoint, rather, MVP, some level of traction, I do raise significant institutional funding in the past is also things to sort of keep in mind as you think about applying or as you think about going through the investment process. I guess just to wrap up and open up for questions, there are a few, recurring questions that we've gotten in the past, and I just want to highlight some of them, hopefully answer some questions at the back of your minds so far. The relationship with Flourish Ventures, like I said, was spun out of Flourish Ventures, and they've also been very, very supportive in terms of the entrepreneur development within the program. In terms of equity that we get in startups, so Madica currently invests using safes or any similar sort of investment structure, and valuation caps will typically, vary based on what stage the company is or where they are in that life cycle. But we are very, focused on using safes at this point, considering how early stage these startups are. In terms of our vision, not to overflog this, but we do, like I said, we're trying to address the structural gaps that exist in terms of how innovation and entrepreneurship, sort of happens across Africa. And for us, it's really about empowering the mission-driven founders, giving them access to capital, mentorship, resources. And at the end of, what underpins all of that is that we're trying so hard to change the narrative of African startups, trying to lower the risk that are perceived by other investors. certain ecosystems or certain business model, and at the end of the day, attract more capital within those ecosystem. Very key. Our program, while I have said, we're very similar to what you describe as an national program, but differently is that it's really not a cohort-based program. We accept, both applications, but also the programs on a rolling basis, depending on when, an investment is closed, your program starts. Historically, that's how we've done it, but there's also key learnings that we have gotten in the last few, startups we've invested in, and are thinking about bringing some level of structure into when programs start. So probably in the future, you could see a case where program starts, say, beginning of each quarter based on investments we've closed in the last, but it really isn't a cohort-based program, but very flexible in that regard. Thank you so much. I hope I have been able to provide some level of insight and understanding into Madica, what really drives us, why we exist, what is our mission. But beyond that, how we, think about supporting founders and how critical we think the support is to the startups generally. I'm happy to take as much questions as possible. I do believe we have a bit more time. But yeah, I'm open to questions at this point.
Awesome. Thank you, Francis, for that in-depth walkthrough. And right now, as Francis mentioned, we're moving on to the most exciting part of today's session, which is our live Q&A. So this is your chance to ask us anything about Madica. So please feel free to drop your questions in the Q&A tab or the chat, or even raise your hand for the raise hand feature. And yeah, we'll bring you on to speak. So yeah, let's try to make this as interactive as we can and maximize on time.
I think Busayo has had two hands raised for a while. Why don't we start with Busayo? Busayo able to speak, or are you dropping the questions? Okay.
You can hear me now?
Yes, we can.
Okay, greetings everyone, and thanks for the opportunity of speaking. I think this is the first time, the last time I applied for the medical seed, for the seed grants now, I was declined because I did not really get the full picture of the sectors medical are into, like the sector in terms of the agricultural solar panel. Like you make mention that most of the investment coming to Africa now is going to the fintech. So which of these sectors are you, is Medical really looking into? That's my main question. Which of the sector? And second, the investment of Medical, is it from a newly set up business, not a business that have been from maybe like 1 to 3 years, or a new set up business that maybe just register and things of such? Sure, you understand my question.
Yes, I do. Thanks. That's actually a very, very interesting question. Maybe to address the first one, from a sector standpoint, we are sector agnostic. Just first of all, keep that in mind. However, going through sort of the strategic fit of who is the medical company or what kind of companies we're trying to support, there are different layers or lenses that we look at it at. And one of which is there is the sector exposure, but also geographic exposure, right? So we're sector agnostic, will do any sector that is very interesting. However, if you think about it like a Nigerian startup doing fintech versus a Ugandan company doing fintech, it's still the same sector, but from a geography standpoint, Uganda has seen less funding. And that sort of aligns with how we're thinking about democratizing access, or at least, making even in the playing field from accessing financing, right? So we invest in multiple sectors, but there are also other lenses that we would also consider in terms of which sector in what geography we want to be able to support in that regard. The second question was around what stage. I think that's how I'm understanding the question, the startup needs to be in. It doesn't necessarily need to be a newly formed company. Preferably, we prefer it's not a newly formed company, because beyond being early stage, there's some level of validation that is helpful for us to see, to know that this company has commercial viability, and one of which is traction, like I mentioned in the past, right? You need to have a lot of products. There needs to be an indication that there are people willing to pay for this product, either from a customer standpoint or preferably a revenue standpoint. So there is additional validations that we need just beyond being an early stage company, right? I hope that answers that question. So an early stage company could be a company that has been existent longer than 2 years, 3 years, right? It just means that in terms of like market access, you're still really at the early stage, either validating, your tech, your MVP, your customer or that market, and need additional support from a partner like Madica. We're more than happy to sort of support founders who are in that growth bucket. But it's really not about, really new companies. It's really about the stage you are in that makes it early stage. I hope that answers that question.
All right, so the next question we have is from, I think, Savannah. You're free to ask your question now.
Hi, thank you. Well, my first question was answered regarding the stage of the business, but I can ask a follow-up on that is, what if the business has raised funding before and is in the growth stage at the moment? Or is there a way where you clarify what a early stage company is based on revenue or anything like that? And then also the second question I had was regarding the equity. Is there an average amount of equity that you generally take based on the previous investments?
Right, great questions. I think from a early stage standpoint, there are a few indicators, right? So say from a funding standpoint, typically, I'd say looking at past investments, on average, startups that are raising anywhere from 500 to 1 million, right? Or I would say less than 1 million in funding in this round makes sense for us. We're happy to take a look at those kinds of startups. But if you've raised 1 million in the past and you're coming to Madica for funding, I think it will take, stronger conviction for us to want to explore that, right? Not to say that we may not do investments like that. Also, I think it's worth noting that, early stage could differ in different sectors, right? So for a biotech, for instance, company or deep tech company, early stage could still mean I'm raising 2 million, right? But for a fintech or maybe BTC company, early stage could be less than that. And I'm talking from more of a funding round standpoint. But on average, what we've done in the past really has averaged anywhere from 1 million or less. Valuations that we're looking at would typically be on average, 5 million, maybe a bit higher than that or less. But I think what is very critical for us in terms of what is an early stage company is really, one that has, in some sense, either built a technology or a solution, has gotten some early validation that, people want this product or people want to use my service. I need money now to go scale, that solution and acquire or capture, significant market opportunity, right? Companies or startups that are in that category are what we sort of describe as really early stage. There's some level of tech, an MVP, some indication of early users or even paying customers. And what you need funding for now really is to expand the reach and the number of customers that you can, acquire. that would typically be how we categorize it. And it's reflective in how much you're raising, what is your valuation, and a few other factors that, we take into consideration. The second question you had was around how much equity. So we invest using a safe, and I guess it's similar, investment agreement. With a safe, really, there's really no valuation or equity upfront. It's really, the literal definition of safe is simple agreement for future equity. And the reason why we've structured it like that is because, again, thinking back the kinds of founders that we want to support, these are guys that are, historically been underfunded or are operating in emerging economies or emerging cities where funding hasn't really been going in historically. It will be difficult to start conversations about equity at that stage because there's so much more they need to do to get to a point where we can objectively value these companies. So for us, early stage is we believe in you, the founder. We want to support you. This investment will be done in a safe at a certain valuation cap. What that really means is that we won't get equity until you hit certain valuation milestones in line with the agreements that we have. Right. I hope that's helpful. So there's no equity upfront. It's really, we believe in you, the founder. We think that what you're doing aligns with sort of our investment thesis. We want to support you. Here is a ticket size that we think is sufficient to get you through the next few stages. Here is a programmatic support that can help you address certain challenges. And when we believe that you can hit certain milestones, certain valuations upon future fundraisings, then we get equity as part of our investments. That is really holistically how the SAFE works and how sort of Madica structures its investments. I hope that answers the questions. Savannah, I can see a few more questions in the chat. Let me just run through a few of those, and I can see a few more hands up, so we'll also take those. But I guess maybe 2 minutes just to run through the chat and see if there are any questions I haven't answered. One question says, how many cohorts do you run annually and what sizes? Like I said, it's not cohort based. We accept applications on a rolling basis. The investment process is really on a rolling basis. And so for each startup would have different, start date and end date. But I've also alluded to, we're also thinking about, putting some level of structure into it, over time. And criteria for selection, we've also touched about that on that. There is a strategic fit where does this align with the vision and mission for Madica on how we're thinking about supporting the African ecosystem, particularly the underfunded and underrepresented categories. But there's also the commercial criteria in terms of where you are as a company, what is the commercial viability of this business, and then what sort of funding have you raised in the past? Does that sort of fit into what we're looking for? What sectors do you invest in? We're sector agnostic, but like I said, that review process would also take into consideration a few other things, like, what geography are you operating in within that sector, and a few other criteria, but generally very sector agnostic, and we're open to reviewing and speaking with founders who are building in different sectors. What do you consider as pre-seed stage? Is there minimum prerequisite, product development, launch, active users, etc.? I think it would vary, right? Like I said, from the sector that you're operating in. A fintech startup, I think, you need to have tech, some level of active users, revenue, I think, a good indication for us at a minimum. A biotech company, I think, because they have such long development, timeline, maybe just some level of interest from potential paying customers could be an indication of, prerequisite, right? That you're building something that someone wants. And an indication of that in a biotech company is probably with LRIs or some level of memorandum of understanding, where you do have, the technology or the product, being developed, and we believe that this could, be viable long term. Other sectors would have different, I would say, prerequisite, but generally what we want to be able to estimate is the general level of demand or interest in what you're doing, and then how viable this would be if you're able to capture, significant market. What is the structure of investment and cap? Like I said, it's the safe. Cap would vary depending on different businesses, but on average, I would say we're in that 5 million valuation cap range. Is there follow-on funding? Right. This is a very, very, I think, important question. Right now, we're not structured to do follow-on funding. That may change in the future, which is why the 18-month program is very, very critical for us in terms of value add to our startup founders. So it's 200K as an initial investment, but I guess non-quantitative investments that we are also bringing to the table is with the structured investment program that allows you to actually scale. What we help startup founders do is actually, sort of drive follow-on funding from other investors, right, within our network, by intro, really showcasing our startups to our global network of investors and trying to catalyze investments from that angle. But as Madica, we don't do follow-on funding. Do you invest in venture studios? This is very interesting. I don't think we've seen a venture studio application, but I think it would be very interesting to actually explore that. We haven't done one yet, but very open to also, having conversations around how that scales and how that, fit into our mandate. Do you do new sectors with huge growth potential like alternative proteins? Yes, we have. Our investment in South Africa, New Farm Foods, actually is in that sector. So we're very open to new sectors, emerging sectors, disruptive sectors as well. Just looking through this. So someone is asking, the investment amount is 200K in the safe. We need to know about the expected percentage you take. How do you calculate it? I think the simple calculation for that is, and again, this is not an exact number because there are also other, variables involved, including dilution. But I guess high level, if we're doing simple math, is if we invested, let's say 500K in a company and the valuation cap there is 5 million, what that means is at the point where the company reaches, or achieves a valuation of 5 million, our 500K would now get us, that's about 10% in the company. But that would differ from startups, obviously, based on what we agree on. Is your deal a standard deal or valuation cap can be negotiated? Yeah, it's very, like I said, different. It's honestly, so we try to agree on a valuation that is fair to both, us as investors, but you as founders. So it's not standard, like I've said, different startup founders would have an indication of what they think they're valued. If we think that's a fair valuation, we're open to, doing that. If we think that there's room for us to negotiate that, obviously in alignment with what the founder wants, I think, it will be based on negotiation of what we think is fair for both parties. Just a few more questions. Right. I think we can take a few more questions from parties that have their hands raised. We'll come back to the chat in a few minutes as more questions come in.
All right. Let's start with Sheena. I think you've had your hand raised for quite some time.
Hi team. Thank you for the opportunity. I think this is a fantastic opportunity for startup. So I have a bit of concern, and I think this might sound a bit unfair, but I feel if you can put a bit of clarity to what you actually consider means of validation. So I think I remember we applied last year. I think our application was rejected. Of course, we were still a bit early last year. So we've applied again now, which is about 3-4 days ago. we're a bit better now. We've done about $30,000 in revenue. So I just wanted to know the exact, if you don't mind, like in figures, yeah, because I feel like there's a bit of not clear transparency. So I'll give you a context. So we sent a request, or we sent an application to SeedStar. So they responded to say we must be doing a minimum of $10,000 MRR. So every month, so which is fair. So for that, we know, okay, we are not doing $10,000 every month yet. So we left that. So we have about 2 of those cases where they want a particular figure for the minimum. So now we are not there yet. So if there's a way to put a bit of numbers to say, okay, 500 to 1,000 registered users, $1,000 to 5,000 for the minimum, things like that. So it will really help a lot. So we know where we are and moving forward, if you don't mind. Thank you.
Right, that is a very interesting question. So I mean, it would again differ for different sectors. So look, there's a lot of variables that will come into play here, right? I mean, I guess let me give you one example of how this could be different. So assuming you are a healthcare company, right, in Nigeria, right, and you're building a healthcare or health tech solution, the Nigerian market is quite large, right, from a consumer standpoint. And so if you're an early stage company, it's almost expected that from early validation, getting 10K or 20K in MRR could be an indication of early validation, right? It could be traction. But then if you're in a market like, say, Cameroon, and you're building similar solution, given that the market is a bit smaller, right? An MRR target or revenue target of 20K might be excessive, right? So there's a lot of factors that we take into consideration. But I do want to stress that for us, it starts from really, having conviction on the team, because we're really taking a bet on the team, on the founders, that they can actually do this. The market potential then comes next. Like, okay, this is the market potential. They've been in business for a year. How much of that, markets have they been able to capture from a revenue standpoint, as it regards or relates to the market in which they're operating? Right. So I do think it's be unfair to put a particular, MRR target, because we're getting applications or we're seeing founders or solutions for multiple markets with multiple different market dynamics. And so the bar that we have for a Nigerian business would be different from the bar that we have from Ugandan and Cameroonian business in that sense. But generally, I do think that, just being able to show that there are enough people paying for it upfront is a good sign for us to now spend a bit more time to see, okay, how much more can you do? I hope that's helpful. I know you wanted a particular figure, but because we're dealing with multiple sectors, multiple geographies, we can't have a one size fits all, because then we're being unfair to, sectors that have been underfunded in the past. If everyone comes with a, blanket statement, I want 20K in the Nigerian market versus a founder who is in Cameroon, it's unfair to the Cameroonian, because that market could be less in terms of potential, right? So it will differ for different markets, in my opinion. But we're generally objective, and honestly, we do provide feedback for applications we rejected if requested. We do have a lot of applications that come in and may not have time to provide feedback when we reject. But if you do ask for feedback, we do spend a lot of time really speaking with founders and letting them understand what didn't work and what could be done better. I know that's not an exact answer, but I hope that's helpful.
All right. In the meantime, we understand that we're running a bit over time, so we'll add a few extra minutes to cover more of your questions. For anything we don't get to today, don't worry, we'll have a follow-up AMA session soon to dive deeper into more of these questions. So thank you for your patience and engagement. But I think we have more questions in the Q&A tab. Francis, so maybe we can go over that, and then we can answer a few hands that have been raised for quite some time. Yeah.
Okay. Let me just look at that. Right. So pre-revenue startups with other forms of traction considered? Yes, like I said, it will also depend on the sector you're playing in. So deep tech, biotech, it takes longer for you to commercialize, your solution, but you do have traction in terms of either building, your whatever it is you're building. If it's like physical assets, if it's like technology, if it's like a new process of synthesizing certain types of proteins, that could be considered, traction. But there's also some level of demand or interest from people who will ultimately be your customers. You haven't yet commercialized, but there is some level of validation for what you're building. You definitely consider that. Have you only funded for startups during your whole existence? Like I said, our sort of process, after approval. So we've gotten a lot more approvals, quite frankly, to date, about 9. But then they're just also going through the legal process and ensuring that they are well structured to receive funding. So while it's at 4 that have been received funding, there'll be a lot more of those that would be finalizing legal and would be announced over the next few weeks. What type of ventures you fund, which sectors? I think we've covered this. We're sector agnostic, but very focused on early stage pre-seed companies. Is agriculture and sustainable agriculture a field that Madica will look at? Is looking at greenfield development and agri-tech development. Definitely. It's definitely a field that I think we're very interested in. If you send in an application, we're keen to learn more about, what it is that you're actually doing in that field and how commercially viable it is. I mean, at the end of the day, I think it's worth understanding that while our mission statement does, denote, building ecosystems, but ultimately still a VC fund. So it's not grant funding in that sense. So beyond just having strategic fit, it's also important that, these startups or whatever startup it is that we're investing in also is commercially viable long term. As long as you feed in those 2 buckets, we're, very excited to spend a bit more time understanding, how you fit. What is the typical response time after an application is submitted? Additionally, could you clarify the age or stage of business that you consider for investment? Right. In terms of the response time, I think we try to keep it at 2 weeks for each stage at most. We do understand that, it could be better and are working on streamlining that process to a bit more, achieve a faster response time. But typically be around, 1 to 2 weeks, depending on what stage you're in. So for stage 1 applications, usually a week, 2 weeks. Stage 2, same thing, screening call, about 2 weeks too. And then, if you get into the due diligence process, that was take anywhere from 4 to 6 weeks. But again, that's a very good question. Internally, we're also working on sort of streamlining that and bringing that time, a bit lower. So maybe 1 week for each stage, and then maybe 4 weeks for due diligence. Or the better we get, the more streamlined and efficient we would be. What age or stage of business do you consider for investment? Like I said, early stage. I wouldn't say we have a particular age per se. As long as you are in the category of early stage company that is trying to scale, I think you fit. If equity clarification, if a business has a turnover of say $100 million, what would be your equity stake? I mean, that's not how it works. So equity would be based on the valuation of the company, not necessarily the turnover of the revenue. So for a business with $100 million in turnover, there needs to be an indicative valuation. If you have a valuation, it will be based on what you think you're valued, that you will get an equity stake. So it's not based on revenue or turnover at this point. And by sector agnostic, does construction apply as well? I think this depends on what you're doing in that sector. I think it's important to note that while I say sector agnostic, we're still very focused on tech or tech-enabled, businesses in that sense. So if you are playing within the construction piece, but are providing some sort of, solution that is, I mean, I would say it depends on what you're doing or what, value proposition would be. But it could be interesting to actually see startups from construction, because I don't think we have actually seen some in the past, and to understand sort of what, innovation you're driving in that construction space. So, yeah. If this have been asked, please ignore. What is your investment thesis? Are you looking for potential unicorns or profit-generating ventures with healthy multiples, 10 to 30x? Right, that's actually a very good question. So yeah, I mean, every VC fund is looking for potential unicorns, right? Or profit-generating ventures with healthy multiples. I say definitely. But we as Madica also understand that because of how we are structured and the kinds of markets or businesses we want to support, I think we're a bit more patient with what returns we're expecting, right? Most investors will probably be looking at 10x 5 years. We do think we're taking on additional layer of risk, and so a bit more patience. But ultimately, we do want to make returns on our investments with healthy multiples. Do you have any issues with startups, with solo founders? No, not necessarily. We have done investments in startups that have been, solo founders. So not particularly, I would say. How long is the process from application to funding? Great question. Like I alluded to earlier, I would say it would take anywhere from 8 to 10 weeks, for being frank. But we also recognize that there is room for improvement even within our own internal processes and are trying to bring that, timeline lower. Most of this time really is spent during due diligence. So if we have conviction during the application and screening stage, we still have to spend a lot of time really building further conviction while we're doing due diligence, and that could take anywhere from 4 to 6 weeks. But again, really refining our process, taking key learnings, and hoping that timeline would come lower. I think that's about all the questions. Just going to go to the chat and see if there are any other questions we haven't answered. And again, I know we are sort of over time, but I'm happy to spend a few more minutes really just trying to address as many questions as possible. Again, this session is recorded, so we'll have this available to everyone, either online or via email, if you're not able to stay to cover all questions. I think we have a few more hands raised. Shamsa, do we want to also bring them?
Yes, absolutely. Let me just have a look. The next question is from Tom, so I'm just going to let you speak.
Hi, you can hear me okay?
Yes, we
Hi,
can.
Tom, yes.
Yes, thanks. Actually, most of my questions have been touched on, but maybe just to seek clarification. And again, I relate with the last asked question with Madica. I find your response in terms to questions very vague. And as founders, we want to also help you when it comes to what you're looking for. So again, for instance, if Seed Stars would say around 10K a month, so they also are sector diagnostic, so they look at very many sectors. So coming up with a number would also be a little bit easier because it makes me apply. Because I only applied once, and since I didn't get to understand what you're really looking for, so that discourages me from applying again because I'm not sure whether I'll have to spend a lot of time applying and I'll still not get into it. However, I took time to listen to you today, and I've taken time to look at what you invest in, though very few startups. And I noted what we call the team is very important to you because generally the kind of places that you have invested in startups that you have invested in, the team seemed to be an outlier for me. So very well, in terms of team, you want a very good team who probably understand what they're doing and all that, which is okay. And I believe saying that would also make it very easy when I'm applying. However, now just to ask a few questions, maybe based on the feedback or the vibe that I've gotten today, I want to understand how much do you allocate for your fund every year? And for instance, for these years, how much dry power do you have remaining to invest? And assuming you get the approval from your IC, what is the process for you to finalize the transaction? Or do you need to make a capital call from your LPs? So that will help me understand now, especially because I've seen very few startups that you've invested in, very few. It's just a handful. So I need to understand how much do you allocate in commitment, and yeah, how long will that get to me, for instance, if I apply and I pass and you got an approval from your IC. Yeah, so I think that would help me understand whether I should attempt applying again.
Right. Okay. Great question. The first question you're asking is, what is our fund size? If I'm understand you correctly, right, Tom?
Yes. So how much do you invest, for instance, in a typical period? Let's say most VCs firm will be like, or accelerators will have, let's talk about 100K USD to invest in a period of 6-8 months. So that's what I'm talking about.
Right. Okay, right. I guess in that regard, the way we're structured, again, remember that, we have sort of some fund under sort of Flourish. And for us, this is like a 3-year experiment in essence. Have about 6 million, to invest, and we're looking to do about 25 to 30 over the next, I would say 3 years. We've been only investing or deploying capital, I would say, over the last 12 months, thereabout. In terms of startups that have actually closed is what we should on the deck, but there are a few more in the pipeline that have gone through our process, have gotten IC approval, and we're more than happy to make commitments. They are now going through legal, which is a very, very critical part of our investment process. And we've done about 9 of those so far. So there are a lot of those startups that we have, or are going to do investments in if they can meet, our requirements or criteria through legal, right? So very important to know. From dry powder perspective, our goal honestly is to do up to 30 investments over the next 3 years. So by 2026, that is sort of our target. We do have funds available allocated. So we wouldn't need a capital call in that sense. Those funds are already available, and really is on us to accelerate how much of this investment that we can do between now and mid 2026 in that sense. Your second question was how much we invest. So I think it's 200K, like we've said. And yeah, just going back to the fact that there's enough allocation for us to do up to 25, maybe 30 investments over that sort of 3-year period. I hope that answers it, and I'm not sure if I missed anything else that you asked, but happy to also go over it again.
All right. The next question we have is from Daniel. You can now ask your question.
All right, thank you very much. My name is Daniel Idiari, founder of VarsityScape, and we're helping scale cohort-based education in Africa. So my question specifically is in terms of distribution. So how do you help? How's the program structured to help with distribution, especially when it comes to enterprise level sales? Is that something that you provide within the program? And I think my next question is, in terms of the investment, the checks that you're writing, do you do this in conjunction with other VCs? So let's say we're trying to raise from somewhere and we're also applying to Madica at the same time. Is that a problem? Or is that something that you can work around with? So thank you very much.
Right, very good questions. So I guess maybe the first question really is we're asking around enterprise sales. So like if you need help in enterprise sales, is that something we can help with? So I would say yes, but how we help is, what is very critical to understand. Part of the value that we bring, in our position in the ecosystem with our affiliation with, Flourish and mentors that we're sort of building that network of, is that we would have access to some of the resources that founders or startups would not be able to access themselves. And so leveraging, Madica's network, we would be able to help you address certain challenges you need. In your particular, case, if it's enterprise sales that you need, say you need to hire or you need introduction to certain industries or certain companies, we believe that within our network, we should be able to, help facilitate that. This is value we've done for some of our current portfolio companies from a hiring standpoint, if that's what your question is specifically, help you either craft a JD, work with some of our key mentors or ecosystem partners to help you find the right talent. If it's from a market access or interest standpoint, I mean, if you think about how the network nodes within Madica could work, I think we're 1 or 2% away from who you need to have conversations with. If it's partnership you're sort of like thinking about, if that's the direction we're going. So we're more than open to, work with founders in any capacity they need. We may not have directly, what you're looking for, but within our network, definitely are very confident that we'll be able to help you, address that challenge, if it's hiring or if it's introduction or if it's market access. Your second question was around if you're raising funding from other sources. I think most of the startups we've gotten or we've funded, honestly, we invested with other investors, right? So if you're raising a 500K round, for instance, obviously our ticket size is 200K. You still need to raise the remaining 300K from other investors. In fact, what we're willing to do is, if any of the other investors you're currently speaking to are people that are within our network, we're more than happy to help facilitate those conversations, jump on calls, help them answer questions that could help, them build conviction and hopefully reach an investment decision, relatively faster. What we're also doing is, if we have conviction and we've done a deal, it's imperative on us, or it's beneficial to us, to help you close that round. So what we then do is, within our network, do introductions to potential investors who we think your business aligns with, and help you sort of catalyze capital to help you close the round. Because honestly, fundraising is a very long process in Africa, quite frankly. It's even more challenging for the kinds of founders or startups that we are supporting. So it's very imperative for us that we're able to help them, close round very, very quick, so they can actually spend time building and scaling their business. So in that sense, we are not opposed to, co-investing or working with other investors. As a matter of fact, it's actually beneficial for us to help you close the round. And if we need to do that with other investors, whether it's directly sending your pitch deck or scheduling calls or driving those conversations, it's something that we're more than happy and open to supporting founders with. Any other questions?
Francis, maybe you can go through the Q&A questions remaining, and then yeah, I guess we can call it a day and schedule most of the other questions in our follow-up AMA session.
Right. I think there's one question I think that I haven't answered that has come up. I wish you could give me a chance to ask my questions. I don't know who Xiaomi is, but why don't you have them ask the question as well?
Great. You can now ask your question.
Hello. Good afternoon.
Good
Hi,
afternoon.
good afternoon. Yes.
All right. My name is Delight Louis from Akwa Ibom, Nigeria, CEO and founder of Oasis Cabana. Now, I've paid attention. I applied some time ago, and it's obvious I didn't get feedback, or I got a mail that I wasn't qualified. Now, first of all, outside the funding, I'll need an advice. Okay, first, 5 years ago, I've been in Akwa Ibom to be able to observe a challenge in the system, which is first, people who have passion for what they want to do. First, majorly pastry businesses, okay, but they have issues with access to capital. And even when the government tells you, oh, there's certain monies at the bank, go get it, you go there and they're asking you what you can't even afford, okay. I think we had those capital, we would have gotten our money and go into business. So we decided to actually find a product that is very hot in the market, which I noticed that pastries, exotic pastries are very hot in the market, and I had no much capital. The least capital I had was around 2 million naira, and I was able to build a structure, and I funded it, and eventually it was successful. We did all the analysis and we knew how successful it is. But the business is built on ability to scale. It's franchisable. Okay. And I've been looking for investors to be able to see how they can put hands with me, to be able to see how we can both build a formidable structure system and also start scaling. And the scaling is instead of buying franchise, you buy license. Buying license is for me the way we actually organize it is that instead of using capital to be able to do that, we build a kind of structure for you, and you run the store for the first 1 year, and we take a cost, then you have a certain percentage, you own it. And that was how I saw it could be a perfect business structure. And we also noticed that we can add subscription system to the business, meaning people can actually pay a certain amount for one full month to have product delivered to them, which I've done all those calculations with my team. And we noticed that it was a good deal, but I had a lot of issue trying to find investors. I don't know. And from what I'm hearing, I don't know if such funding is for me, or you guys are actually willing to fund someone like my kind of startup, or where do you think I can have capital to be able to keep building, please? Thank you.
Yeah, thanks. I'm not sure I got everything you honestly said. So what is it you do again? If you don't mind just going over
Okay,
that.
we sell exotic pastries like shawarma, burgers, smoothie, parfait. And
Right.
instead of renting a store, we build a small cubicle that has a similar structure and hand it over to people to own. And we get 50% returns while they keep the rest.
Right. I mean, that's a very interesting one. I think the way we think about, at least from Madica's standpoint, the way we think about, the kinds of businesses that we support, there's some level of while the way you're thinking about it is innovative, and I mean, I'd love to learn more about, how you're doing it differently. For us, is also where is the tech and tech-enabled, aspects of this business. If you haven't, have you applied to us before? I mean, if you haven't, you can send us an application or actually just reach out to me directly and we can have a chat around this. I think that's preferable before we align on if we should apply. But I think generally, in terms of the kind of sectors that we're looking to fund, this may not be 100% fit. I don't know, and I don't speak out of turn. But please reach out to me directly on LinkedIn or whatever medium you have access to me, and we can have a chat about how this fits and maybe offer helpful advice, even if it doesn't fit with what Madica is looking for. I'm sure there'll probably be other ways that we can help you. All right. I think, yeah, well, yeah, over time. Thank you so much, guys, for your time. I guess the last question here is, why are you guys so awesome? Right. Well, I don't know how to answer that question, but I appreciate the fact that you think that we are awesome. To be honest, given what it is we're trying to do and the mission statement that we're trying to, birth in terms of how we're thinking about funding in the African continent, it's a lot of work. We recognize that it's a lot of work, but it's also something that we think is very critical if you think about the entire African continent, growing from a funding and startup, standpoint. We're happy to do the hard work, hopefully help de-risk some of these sectors or some of this geography, and by doing that, catalyze more investments into those sectors and, those geography long term. But I also appreciate the positive comments on the team and the work we're doing. I think we've taken as much questions as we can. If there are any additional questions, I'm sure there are ways you can reach out to us. More than happy to respond to as many as possible. So I'll hand back to Shamsa now. Thank you so much, everyone, for listening and for the questions. I hope I was able to address most of them sufficiently. And for those that I couldn't, please just reach out to me and I'm sure I can provide a bit more context to those questions.
And in the meantime, we encourage you to visit our website at madica.vc/apply to learn more about our program as well. And just, yeah, if you also want to get involved, whether you're a founder seeking funding, an investor looking for opportunities, or an ecosystem player wanting to contribute to the growth of African startups, we'd love to collaborate with you. And yeah, so thank you once again for being here. We're super excited to continue these conversations and collaborations and look forward to seeing you at our next event. We'll definitely have a follow-up AMA session where we'll tackle most of these questions, and hopefully you'll also get to meet some of our founders for a more one-on-one kind of Q&A with them, just to really understand the experience with our program and whatnot. Until then, take care and keep building.